Market took a little bit of a breather last week as stocks pulled back after, gosh, I guess it was about a 6-week run of just stellar returns. So due for a pullback, a little bit of a breather, so no worries there, but did have some negative returns. This week we are now 1 week away from essentially the election, and so that's kind of probably going to be the focal point this week. And along with that is a huge earnings week, as earnings season is in full swing. So this is your Market in Minutes report. I am Mike Minter. We are looking back on October the 21st through the 25th. And so let's look at the numbers behind last week. As I said, not a great week. Had some negative returns here across the board. Big tech, i.e. Nasdaq, I should say, was the clear standout here. Didn't lose any ground here. It was relatively flat. But as you can see, the broad markets across the board were down. So we'll talk about reasons behind that in a minute. But just stepping back for a minute, still stellar performance year to date. I don't think anybody would argue with that. Across the board, all indices up double digits and then some. So very, very nice. Rates continue to confuse because at the very time the Fed is actually starting to lower rates now, the rates have gone up. We've talked about this over the last few weeks. And again, so much of those rate reductions were already priced into the bond market. And so you'd already started to see rates come down in anticipation of the Fed's move. So much of that was simply baked into before they actually started pulling the trigger and lowering rates. And those aren't the only reasons, just because it was baked in. But it just goes to show you that the Fed doesn't control every aspect of the rates market. It just controls the federal funds rate. And so sometimes that doesn't translate into a direct correlation with market rates, as we've seen. So anyway, we'll talk a little bit more about that too. But let's get into some of the stories here. So obviously, as we talked about, the Nasdaq did lead last week, although it wasn't up big time or anything. It was just basically flat. But tech stocks did hold their own in while the broader markets were all down. But stocks were mixed for the first half of the week as investors geared up for a steady stream of Q3 reports. 10-year Treasury yield continued to trend higher, which caught the attention of some traders. And then markets fell on Wednesday morning with news that existing home sales fell to a 14-year low. Obviously, home sales being a huge part of our economy, it's not a good thing. This happened in October, but still slowed by higher interest rates. Sales are on track for their worst year since 1995. So it's been a long time since we've seen numbers like this. But also, pre-election jitters did remain kind of as this undertow with traders. So, and we're likely to see some more of that this week as well. So it's natural. I mean, we're heading into, obviously a presidential election. This is a particularly contentious one and seemingly very close. So natural that we'd have some jitters there. News that durable goods orders rose in September buoyed sentiment a bit. At Friday's close, the Nasdaq, fueled by tech, marked its 7th consecutive week of gains, but the S&P broke its 6-week winning streak. Let's take a look at the election focus. So again, as we've said, we are now essentially a week away. It's going to, news cycles will be dominated by the presidential election, which is obvious, which they pretty much already have been. But so this will really take center stage this week as we head into Tuesday, election day. Election in full swing. Some traders appear to be preparing for an uptick in volatility in the coming weeks. In late August, nearly 90% of stocks traded above their 20-day moving average. However, that momentum has slowed. On Tuesday, Standard & Poor's reported that the number of stocks above their 20-day moving average fell to nearly 50%. And so traders may be moving to more of a kind of a risk-off position ahead of November the 5th. So only natural. This is pretty typical for an election cycle. But what's on deck this week? So key economic data coming in on Tuesday. We have international trade and goods, consumer confidence, Case-Shiller, home price index, and then Wednesday, GDP, Treasury refunding announcement, pending home sales, and we have an employment report. Thursday, personal income and outlays, and Friday we have employment situation and then the manufacturing index. As I stated earlier, companies reporting earnings. This is just a huge earnings week with some mega names in here. I won't go through all of these, but you can kind of just sift through. We have Alphabet, Microsoft, Apple. I mean, the biggest of the big here reporting. So this will be really the story in terms of market movers from a company-specific perspective. So we'll be keeping a close eye on that. And that closes it out, guys. Again, here's all our contact information as usual. Hit that subscribe button down below if you haven't already. We'd love to have you get all our videos as they come out. And that's pretty much it. I will leave you with a little light disclosure here. But in the meantime, we'll be watching things as it unfolds this week as we look forward to next week, which of course is the big election and more and more earnings coming out. So we'll keep you all informed, guys. Thanks. Y'all have a good one.